Morning, everyone. Happy New Year. This is going to be a rather informal stream. I sort of just threw it together because I've kind of made the decision that I want to live stream every day, at least within my abilities. That will be my goal. And part of that would be to start today. Let me turn down this music. So basically, I'm just going to be doing my normal trading, and I'm just streaming it. I mean, it won't be a whole lot of insight, but at least I will get the ball rolling. I see we did, I didn't really do much looking. I really did make a concentrated effort to stay away from everything to do with trading over this holiday weekend, including yesterday evening and overnight. So I come in this morning and I do see that we have a pretty decent drop. Let's see here from up here. Yeah, that's 220 points. And we're down, we were down as almost 1% from the overnight open when we got down to the bottom here. And a lot of people had been speculating that perhaps profit taking was being, people were holding off on their profit taking till after the New Year's for tax purposes so that they wouldn't have to pay tax on gains this year and postpone it for a year. And that may or may not be what happens here. We'll see. And quite frankly, I have no idea of whether I set this stream up right or not. It appears to be streaming. I don't know. I don't see my chat for some reason. But if the chat is not activated, don't worry about it. We'll do it some other day. Right now, I'm just kind of getting ready to go. Okay, markets are open now. And we're already starting to, we had a little back off. These green boxes here are my fair value gaps. We're looking at a 3-minute chart on the NQ. Hang on for a second. I gotta go get my phone. Hang on. All right, I'm back. Just wanted to make sure that the stream was even live. So I checked on my phone, and it appears to be. The chat seems to be up and running, so if anybody does tune in, here I am. In the meantime, I'm just going to trade as if I were not streaming, and as we go on, I'll try to increase my transparency as far as, what accounts I'm trading, how much I'm making, yada, yada, yada. But in the meantime, this is just sort of a soft launch for 2024. I'm also going to start, streaming videos so you can see who I am and whatnot. But right now, this is, you're basically just eavesdropping into my daily routine here. I can tell you I'm running 12 Apex PA accounts. I don't have any evals at the moment. I always like to wait for the sales, and the one that they just started for the next, 4 days is pretty good, I guess. That's 80% off for as long as it takes you to pass your eval. So, the best sale they've ever had is 90, so you just save an extra 10%. But in the meantime, if you want to get started, I would appreciate it if you use that code that's scrolling across the bottom of the screen and in the description. It doesn't cost you any more or any less than if you didn't use it, but it helps me a little bit. I'm trying to offset some of my costs for trading by live streaming and maybe pass on what knowledge I may have gathered over the years that I've been doing this. But anyway, let's see what's going on here. Now we're pulling back again. I suspect we're going to hit some new lows again. We might pause in the middle of this fair value gap. So if you wanted to take a small scalp there, that is another one of the strategies that I might be messing around with this year, is to use more accounts but smaller gains, like say 10 ticks, something like that, but use 3, 4, 5 of my accounts at the same time. I'm still thinking about that because even though you're only going for a small gain, you could still easily blow up accounts, and I wouldn't want to blow up 3 accounts at the same time, because if you're going to get these small gains, you still have to have a pretty you're not going to get a 1-to-1 profit ratio, because you can't have a 10 tick, especially on Nasdaq. You can't have a 10 tick stop loss, even though you're only looking for a 10 tick profit. It just can't do it. It'll stop you out every single time, and you'll just get killed by, as they say, 1,000 paper cuts. But anyway, let's keep an eye on it and see what happens. I'd be tempted to take a small long here. It's pretty early though, first 5 minutes, but yeah, right here at 835, I wouldn't mind taking a small long for a couple points. I don't necessarily think we're going to take a big run all the way up to the top. You can see that this was a nice obvious reversal right at this previous swing high, almost to the tick, reversed off of it. Would have been a nice short, take it all the way down. You see this was a decent long for a few points, but that's all. I mean, I don't think there's any question we're going to test this low. I mean, we don't come down this far without touching that. But are we going to come straight down? Who the heck knows? On this first day, I don't know how much talking I'll do, especially because I see, we're definitely going to test this low of the day. I am not somebody that would definitely want to just jump in at the low of the day and take a reversal, but you could probably count on a few points bouncing off this low of the day if you were just a true scalper. You can see volume starting to come in at this level, but I just don't see any scenario in which we don't test this low of day. But if you wanted to go for a couple points, I think you'll get some rejection off of this bottom of low of the day. Not something I would necessarily trade, but because of this big old drawdown overnight, this would have been your trade right there, because we had a nice pullback. And you can see it's rather erratic, so it's not like a lot of conviction with this. And when we get to this previous swing high, you knew you were going to get at least some pullback off of that. I don't know that you could have anticipated this entire move, which turned out to be fairly substantial. We can measure it. So, from here to here, that's 60 points. That's a $1,000 move with one contract. But yeah, look at that. That just plowed right through it. We didn't even get any rejection. We have a new low of the day. Right now, I'm just going to sit and watch what's going to transpire here. I think it's fair to say that we're going to be looking strictly at shorts today. I mean, the shorts are the confident moves. I have this line here. I've drawn some lines for some possible reversals based on previous price action from other days. At this point, I think we're probably looking for shorts on pullbacks. Yeah, it didn't even slow down. I suggested that perhaps we would get a pullback off of the low of the day before it continued. Nah. This is obviously very heavy. I mean, from overnights, we're talking a big move down here. 242 points, and go short last night and you made almost $5,000 on one contract. Just go short and go to bed. Wake up with $5,000 in your account. It's just that easy, isn't it, guys? We just have to sort of watch this. I would not want to get in front of this trying to predict the bottom. You'll never do it. See, some volume started to build here at 800, which you'd expect. Big round number. Sometimes I draw these lines in here and they were like weeks ago, and I have no idea why I put them in there. I'm guessing it was probably some area of support or resistance. A swing low, a swing high. I mean, who knows? I'd have to go back into a higher time frame to see where that might have been, which we could do, but you can see it is reacting to it. So wherever I drew it, I should start labeling them. Like, for instance, on Trading View, or even I think Quantower, when you put a line in there, you can label it. I don't think I can do that in NinjaTrader. It definitely reacted to it, so I need to pay more attention to them, because those lines are usually pretty useful. But I hesitate to take a trade off of them because I don't even remember why the hell I put them there. We might have hit a temporary low for now. I still have to set up my. I've got the Financial Juice live news alerts. I still need to hook that into my mixing board so I can broadcast that live. That's very handy, especially on news days. But all day long, it's nice to hear the live chatter during the stream. So we'll add that. I do have it. I just don't have it hooked into the mixing board right now. Yeah, I don't know where this is going to stop. Let's take a quick look at a higher time frame, see what. Let's go to a 15-minute. Back to a 3-minute. I'm gonna look on another screen. I've got my Quan Tower running on another computer here. Got a level for a short back up at 855 if we should retrace. 855 up in that area right there. That would be my short if we got back up there, and that really kind of just reflects all of these swing lows. There was a lot of supply up there. Yeah, 155. And you can see we have some fair value gaps starting to build here, so you might on a drawdown. This seems like an intriguing fair value gap, because not only is it a fair value gap, it also lines up very nicely with this swing low. So I'd be inclined to take a short there at right around 817. We give it a shot. I'll probably only stream till about 11 o'clock Eastern today. And as time goes by, I'll probably spend more time streaming. But it's when you're out of practice, it's hard to stream and narrate and trade all at the same time. I need to practice that. In fact, in some ways, I feel like not even streaming until after 10 Eastern, just because I can get my trades. I can concentrate on my trades for the first half hour or so of the day. But I can see how you as a viewer would find that to be inconvenient that I took all my best trades off stream. But who knows? We'll see. This is going to be a work in progress. And to be completely honest with you, the main reason for me to do this is to see if I could generate a little bit of side hustle income along with the trading, offset costs of the evaluations and the cost of the PA purchases. And I'll go more into it, because one possible strategy with the normal strategy that someone might use on their own funded account, their own money, is different than you could do with the so-called PA accounts or the prop firms, because the rules of trading are different for prop firms. I mean, you have a live trailing drawdown. Well, you don't have that on your normal account. You only have that on these prop firms. So the rules for trading are going to be different because you have different rules for the funds that are in that account. So one strategy might be to treat them as disposable accounts. I mean, you pay your, 15 or 30 bucks, you get it funded, you pay your 140 to make it a funded account, or even just pay the $80 a month for, boy, we are really dropping here. Pay the $80 a month for your PA account, run it up to, say on a 50K account, run it up to $2,600 so you can take your $2,000 withdrawal. That only leaves you with a $500 drawdown on that account, which you're likely to blow. So you just treat it as disposable. So you pay your $15, get it funded, pay your $80. So now you're into this thing for less than $100, and then you pull $2,000 out of it. That account is now, expired. So now you just are always creating new PA accounts. You're always just trying to get $2,000 out of every PA account you get and just keep rotating through them. That's one strategy. Is it the right one? I don't know. It tends to be that's the way it ends up anyway, because when you get account to payout at $2,000, that's $2,000 real money. You could take that money right now, or do you continue to trade it and run the risk of blowing it up and that $2,000 is gone? And especially with a company like Apex where you can have 20 accounts at a time, why not just always be taking your $2,000, blow the account, add a new one, and just keep doing that? To me, it's a very valid strategy. And to say that's not how you're supposed to trade, well, these are prop firms. These are not the traditional way that you would trade money anyway. So the rules should be different. I mean, the strategy should be different because they're not the same as a actual your money funded account. This just continues to drop. I have no interest in going long on this account. I mean, on this market right now. This is the ES to your left, which you can see up here in the corner. It is not dropping anywhere near as aggressively as the Nasdaq. Let me take a quick look over on my other side here to see what things like Apple are doing. Let's see here. Pull up my trading view. I should already have this running, but I don't. All right. Tesla down, recovering a little bit. Let's see what Apple's doing. Apple's gap. Well, I had a big gap down this morning. Wow. Interesting. All right, so anyway, Apple it's got a huge gap down. Keep an eye on that, see if that recovers. Yeah, I'm still not convinced that we're even at the bottom today. I think we still have a little bit ways to go. Perhaps 700. I mean, it's as good a target as any, right? I've got some lines here at 680 and 657-ish. But this is the kind of day where, I mean, you try to go long here, you could really get caught in that thing as it flushes. if anything, I would possibly be interested in shorting ES only because it doesn't seem to have participated here. But that may be because the only things that are flushing are the high-tech ones. You know, your big mega caps like, you know, Google, Amazon, Apple, that sort of thing. I would definitely be somewhat inclined to short if we got back up here, but we're getting so far away from that at this point. And you can see they're still shorting even these small pops. I mean, that was a tiny little pop and they're still selling it. Just looking at the higher time frames on another screen to see if there's an obvious bottom here, or at least a place where they might be able to find some support. 628, that's another 100 points. There was a swing low back in the middle of December at around 628-ish. A lot of consolidation in that, like 616 down to 587. I have a line at 578. It's a long way from here, though. I think we'll try to take some trades that are a little less aggressive than that. But yeah, I got 627. It's still over 100 points away. So we're going to have to be a little more creative if we want to take any trades. Let's see what we got here. Where are we at? We're at like 734. I don't know. I guess we could start thinking about, if we don't pull back, you know, maybe we'll throw in a small long at 700, or maybe we can even wait till 680. 680 is probably going to be pretty good possibility for at least a few points, I would think. But there's nothing to indicate we're reversing just yet. ES still relatively strong, but we're still down 0.75%. But man, look at NAS down 1.6. I wonder, let me take a look on another screen. What do we got on, what are the regular cash markets doing? We've got Dow Jones down 0.3, S&P 500 cash market down 0.78, Nas down 1.7, which reflects pretty closely with the futures, so this is tricky for me anyway. I mean, you might be a great trader in this kind of a market, but so I guess we'll just sit here. Now 720, traditionally a very good place for a temporary reversal, and look at that, it touched it nearly exact. I mean, what was the low on that? Low 720, Yeah, 720. That is the exact low that it reversed off of. So, that's a 10-point move right there. Yeah, so we're over 10 points. So that's what, $250, 12 and a half points. Yeah, that's $250 trade right there off of 720. And this is where the streaming gets to be a pain in the ass, because I'm concentrating more on creating some sort of narrative content than I am of trading. I do have a PA account that I was going to work on today. That's only a couple $100 away from a payout. I've got others that are already ready for a payout that I didn't take in 2023. Figured I'd just sit on those until this year. At some point, I'll draw the money out of those. But again, my one thought is to just get all my PAs into payout territory and then decide what to do with them. I might keep one or two and just try to keep trading them and risk, blowing them. But what's nice about once we get into the payout territory is that now we have a static drawdown on those accounts, which does make them a little bit easier to trade. Wow, that 720 turned out to be an amazing move. Wow, look at that. Yeah, that's a 40-point move. Wow. But I still think that it's time to be. We're not going to assume that's the end of the downside. But boy, look at both ES and NQ took off from that point. Now this is my 9 EMA, very useful for a pullback like this. A lot of times it won't make it to the 20. This is a 20 or 21. I think I've got this one as a 20. That's a 20 EMA. This is the 9. And as we pointed out before, this right up in here is, I don't think there's any question that we're going to get a reversal if we get that far up. But a big drop like this and a pullback to any fair value gap could be useful. But I'm not sure. This is pretty aggressive reversal. That could completely be the end of it. What do you think? Should we try to take a short inside this fair value gap? Let's see if we get any kind of rejection off of it. Because now we're starting to get close to 800 too, so could be useful. That unknown blue line that I placed there days or weeks ago is responding. Most likely that was either a swing high or a swing low, some sort of area of supply or demand. But I am tempted to start thinking about some shorts up in here, understanding that if this is a V bottom, but at some point you have to take a trade. Just don't want to get destroyed here. I think I'll wait until at least we get closer to this 20 EMA. Maybe. Love the fair value gaps. The other problem is there is a huge gap between Friday's close and today's open. Will they try to fill that? I have no clue. I mean, that would be an complete reversal. That gap goes all the way up to well, 13 is where things closed on Friday. Theoretically, I guess the gap would be at 9:30. But yeah, it didn't even get into that fair value gap here. And at this point, that 20 EMA may end up being in the middle of that fair value gap. The other possible safe trade would just be to wait for closer to 800, which we're close to. But I am definitely have an itchy trigger finger to go short up in here. When we could either wait, if we start to head up into this fair value gap, I still think we'd safe on a scalp, but now we're starting to talk about reversal territory once we start to get up in this area. I mean, we're already well above the 20 EMA on the 2000 tick chart. So this would indicate we should start looking for some longs, down in here. We never did. Well, we did get a break and a new low here. It's not exactly a clean reversal setup. Yeah. Again, I got to start marking these lines better because this. I always find that my lines that I've put a long time ago work very well, but I don't feel secure with them because I didn't label them. I mean, they get so old. I mean, I don't even know where this went back to. I'm scrolling back. I mean, that's a week ago and it still didn't. So that must have been a very old line I drew. But you can see it rejected right off of it. And we did start to pull away from this high volume area, but now we're just going to start chopping right inside this volume node. I was kind of hoping that we'd at least get into this fair value gap here, and now that lines up perfectly with the 20 EMA on the 3 minute. Well, for me, there's nothing to do right here. I'm certainly not in the mood to be taking any longs here, and we're sort of in a no man's land for a short, in my opinion. I'd like to get a little more of a retrace. In hindsight, we probably should have taken this short, but there wasn't, other than this sort of unlabeled blue line I stuck here weeks ago, there was no real indication that we were finished our pullback here. nice aggressive pullback into this fair value gap probably would have been a good short, but it didn't quite make it. It just gave us sort of a matching top with where the gap, the bottom of the gap. And now we've got a bullish fair value gap here, so dips into there, we might get another reversal for a little bit, but it might just rip through it. This is very bearish morning. It may not even obey it. It's reacting a little bit, but not aggressively. Again, this is where the live streaming kind of is detrimental to me. I would have taken several trades by now, but you know, you're concentrating on the live stream, plus you're worried about making mistakes and blah blah blah. It's easier to accept mistakes when no one else is watching, right? The PA that I've got loaded now has about $250 before I can get a payout on it. So today or tomorrow, I would like to get that into the payout territory, and then sometime before the 5th, I think I'll take $4,000 payout. I try to at least pull out $2,000 each payout period, which is twice a month. So I'd like to at least pull $4,000 a month, which is only what, $52,000 a year. So it's not exactly gonna make anybody rich, but I mean, that's an income, right? And that's only trading one PA at a time. I've got 12 of them. So if you got good enough, start trading all 12. You can go up to 20, which I may, I may actually add, because they have a pretty good sale with the 80% off. They sometimes go as high as 90%, but it's been over a month since they've offered that. We all thought that maybe they would give the 90% off for New Year's, or Christmas. They did neither. If you are anxious to get yourself an Apex evaluation account, the 80% is a halfway decent sale. And if you happen to decide that you want to do that, go ahead. And if you don't mind using my code, they'll give me a little something, like $4 or something. If you it doesn't cost you any more or any less, but if you use my code, then I think I get $4 or something like that, which helps offset the cost of my evaluations and my PA purchases and whatnot. It's just sort of a little side hustle that most profitable traders try to take advantage of. Do a little live stream, try to get some YouTube money, affiliate money. So obviously I'm a long way from any of that, but I consider myself a pretty competent trader. I'm certainly profitable. Had payouts last year, whatever. That being said, it's a number one, there's probably a delay on this of some sort. So if you don't copy my trades. I'm not trying to teach anybody how to trade. It's just observations that I have that I share, and I probably learn as much from the viewers as they can possibly learn from me, but I'm not trying to give anybody any kind of advice. I only trade. I do take one small micro trade on my Ninja account a month to avoid the inactivity fees, but I don't trade my own money out of that account. It's just it's too risky. I mean, I've blown up accounts $2,500 in the blink of an eye. Well, I think I got $3,000 in that account. I could easily blow that out of account. But if I blow up an Apex account, I've lost, well, if it's a PA account, the most I would have lost on it is like 165 bucks. Even if I actually went down, blew the account, $2,500 drawdown. Yeah, I just don't know what to make of this. I mean, it is sort of rounding out into a reversal pattern of sorts, but we're still well below the 20 EMA on the 3-minute chart. And it's possible I just won't even bother trading. I took some sim trades before the market opened and made $463 with small scalps. I think I was scalping 4 points, 2 contracts, and that ended up with $463 after commissions. That was a sim though. Yeah, a lot of wicks forming, so I don't think this is done to the downside. Yeah, here we go. Nice big wicks. This is definitely not done to the downside. But you see it's hanging out in that fair value gap. That's a bullish fair value gap based on this big green bar here. This big green bar created a gap, but you can see now it's starting to break through it. So if this closes below it, that fair value gap will be invalidated. You look on the ES there, you have like a sandwich between a bullish and a bearish fair value gap. I wouldn't know what the hell to do with that. Still likes this level though. So what are they going to do with it? It seems that to me that they would probably want to take it down and at very least pick up. Get my rectangular picture, drawing rectangle. It's like somewhere's in this area. Pick up these stops because there's a fair number of stops below this low of day for anybody who went long. If you took this long, you may have put a stop here. So they may come back, try to collect those stops, and then take it up. Or they could just rip through and keep going down. Let me see if Apple is stabilizing here. Yeah, Apple's just kind of chopping around, kind of whatever you see in the NAS is what you're seeing as in Apple, since it is such a big component in the Nasdaq 100. You probably could expect that. But yeah, we're looking at, yeah, I mean, the two charts could almost be the same. Let's take a quick look at the VIX. Let's see here. Yeah, VIX is stabilizing a bit. It had run up pretty good, but now it's pulled back. Well, I'm sorry the first stream of 2024 is boring, but I promise if you stick with me, it will become more useful. I don't promise that. I don't promise anything. The only thing I promise is that I will do my best to provide useful and interesting commentary and maybe try to have a little fun as time goes by. Yeah, I'm really itchy to short somewhere, anywhere. Like even right here I'm like trying to control myself not to go short right here. Yeah, it's getting heavier. It's continuing to get heavy. We're going to see new low of day for sure. I'm already tired. I may need more coffee. But yeah. This was the short I should have got in on. I waited for the fair value gap to get what they call consequent encroachment, which all it means is a fancy way to say 50% or more. It did encroach on it just by like a tick or something like that. That's about it. But again, this unmarked line that I put here turns out to be good. That happens to me all the time though. I put these lines and they're there for days, weeks, months, and they always come into play, but I'm not secure enough to use them to trade on because I can't remember why I put them there, and I need to start labeling them, obviously. That being said, the minute I start trading off of them, they'll be completely ignored. I thought we were going to make a run for the new low right there. Of course, that's what these guys do. They tease you. They play with you. Make you start thinking that the worst is over. We're going to start heading higher now just to rip it down. Take a look at the daily chart, see what it has to say. It's a 15-minute one. I'm on another screen here. That I'll do better too, is I'll be able to bring these screens over to the live stream. Yes, now we broke a swing low from the 20th. The 20th, we got down to about 58.95. Now we're around, 720, something like that was our low. So did that just tick through it and it's going to head back up, or is that a big breach? I'm actually looking at a pretty good size gap on the daily chart between the 8th and the 11th. That was probably a weekend. That gap goes from about 16,258 down to 16,121. I mean, it's a little early to be talking about that, but it could make a run down there even. I mean, I think the popular belief is that we are going to be into a pretty good sized pullback in the long term for a bit. Because this market did run up a lot in 2023. And people were the fund managers and whatnot, they obviously wanted to pad their 2023 profits so that they can show we're up 20, 30% in 2023. And now there'll be some profit taking, but we'll see. It failed to make a new low here, but we still are well below the 20 EMA on the 3-minute. You see that there is a low volume valley right here. So if it breaks through that, it may have a way to go. Let me check to make sure I'm on the right day here. Yep, we are. Again, it would be surprising to me that we didn't revisit this rectangle here just to pick up some stops before it rips up. I'm going to go on mute for a little bit. I'm going to grab a coffee and watch this thing do what it's going to do. This certainly wouldn't be someplace I'd want to take a trade right now. It's got to make a move one way or another. I'd be inclined to wait for a new low of day before I got in on this. Maybe even wait for 700 before I'd even think about a long, and even then that seems irresponsible. I mean, I am so tempted to just go short here and then walk away and watch it do what it's going to do. All right, I'm going mute here to get some coffee. All right, we're heading down again for that new low of day for sure. I can't imagine a scenario in which it doesn't reach a new low at this point. It's still teasing with you though. Now, one possible scenario would be to go down below a new low of day. And again, there's certainly some stops sitting down here. Traditionally, you would go one tick below this, but it's more of a range than an exact amount. You would think that they would go down here to grab all these before that they would start heading up hard. Nothing about this looks bullish. Us as retail traders just tend to want to counter trend trade, figuring it's already made its run. It can't go any lower. Let's go opposite. And it works a lot, but the problem is that that's how you blow up an account, because it has a lot more potential to continue to go down. I mean, you get in your head this psychological level that you think that it can't go any further than. Like right now, it's like my instinct is like, well, we're just going to come down here, pick up these stops, and we're going to reverse. But there's no reason to believe that. I mean, this thing could go down. I mean, I pulled out some levels that were hundreds of points lower. And here we're coming up on there's our new low of day. Now we'll see if this thing reverses off of here. That is 20. I mean, you could probably pick up a few points there, but man, the potential for just a rip your face off dump to the bottom is there too. Especially when we're sitting so close to 700. We can easily dump into 700. Yeah, just ticked one tick below the previous low of the day. And just a little bit of a pullback. Still heavy. Of course, instead of just talking, I should have just gone short. It could have gone short literally anywhere here. Any pullback. Just, in fact, taking any trade along the 9 EMA would have worked. So yeah, I thought we were actually going to get, it's still revving up, isn't it? We still haven't reached a new low of day on the ES. That seems inevitable. Yep, there she goes. So, and we're going to touch 700 for sure. So there's nothing for me to do here. I might take a small long at 80. I like taking, especially on these PAs that have not reached payout yet. They still have a live trailing drawdown. So I usually start with a 12.5 point take profit and stop loss. I try not to move it to the downside and just take the loss if it gets there. But yeah, this is aggressive. I mean, just even the fact that I'm thinking about a long is dangerous. I mean, I'm just trying to, this is scalping. So, I'm not looking for a big move. And at this point, jumping in on a short, who knows? I mean, we've run so far already. We're almost down 2% at this point. Still hasn't gotten to 700 yet. What's the low here? The low is 702 so far. Again, seems inconceivable that it doesn't touch 700. And we still haven't reached a new low on the ES yet, which also seems inevitable. The low on ES on this bar is 74.75. We're looking for 74. We've got about a half a point to go. Can we possibly not make a new low? That seems unlikely. Because that's where the stops will be. You know, I mean, big players are absolutely positively going to try to get those stops before they would even think about taking it back up. And that's the fact that, you know, that's what this game is right here, where they're trying to convince people that the downside's over. Come on, water's fine. Jump on in. And all of a sudden, flush. Trying to tempt people with longs right here. But yeah, we're going to miss the low of day on here by what? Low here is 74.5, so by 2 ticks. Maybe. Because people like to say, especially retail traders, that, oh, it failed to make a new low. That's bullish. We're going back up. So you see that they're trying to tempt people in here. Come on in. Come on in. No, it's okay. It's safe to go long now. Let's go long. To the moon. To the moon. So they're loading up the bus here, and whoosh. Down we'll go. I would not be thinking about longs here. Although I'm embarrassed to say that I'm tempted to go long at 80 for at least a few points. Yep, there we go. We're heading down now. We're getting, look at that wick. And this rectangle here was just to demonstrate that we had a bunch of stops in this area below this previous swing low. In fact, we can dump it now because we're already in that territory. They're already collecting stops. But do they want to take it even lower? Still didn't get a new low on the ES though. Just playing with you right here. That would be pretty unbelievable that we didn't make a new low here. That we just made another new low on NAS. But again, yeah, this 80 area is tempting for at least, you know, I'm not saying that's the bottom. I'm just talking about for a quick scalp. Not even sure that you could get the whole 12.5 points. Because you figure off of 80, and you have to come all the way up to 92.5 from 80. I mean, it's possible. I mean, this is, you know, moving pretty freely here. Still no new low on the ES. We definitely, on the daily chart, we have now breached a previous swing low, which was probably a fairly important area, but that was only, well, that was the 20th. On the 20th, we reached a new low. Did have a support line at 720, of course, but it pretty much just went through that like it wasn't even there. Which to me kind of, I mean, the lines I have, I'm looking at another chart, that's 720 would have normally held, but it didn't. So now we'll wait for 680. Now the other option would be to wait for a pullback and go short off of this 9 EMA or this 20 EMA. Watch for some rejection on it. And you see that's exactly what happened here. We had a nice pullback. Now typically with such an aggressive pullback like this, an aggressive dump like this, the pullback into the first or second fair value gap would be a no-brainer, and it would have been, and I probably would have taken this short, but you see it fell short. It just touched the bottom of that fair value gap, making an equal high off of this bar here. So I missed it. Also, the 9 EMA is, for a small pullback is always very strong, and you see it kind of like was in a no man's land. It ripped through past the 9 EMA, but didn't quite make it up to the fair value gap or the 20 EMA before it reversed. Now, I did draw this line a long time ago, and I suspect if we go back to wherever that bar was created, there was probably a swing low or a swing high that I marked, and it obeyed that very well. Did we make another? Yeah, this bar made another new low, and we'd finally have a new low on the ES. Yeah, I'm not touching longs here. I'm going to put a line at 80. Let's see. Where's my... Oh, there it is. Horizontal line. I don't think there's a way to label these on let me see here. Yeah, on Quantower I can label the lines, but it doesn't seem like I can do that on Ninja. As you would suspect, though, the 700 is a nice big round number, so it's going to spend some time here. And I've traded big round numbers like that just for say 1 point, 2 points, make a little bit of money, even to go in there with multiple contracts and just pick up 1-2 points, even 4 points. Let's call it 4 points. 16 ticks. But this thing is so aggressively to the downside, I really don't even want to do that. I just want to wait here for maybe 80, and I'm not even sure how I feel about that. It is so counter trend at this point. But the downside does seem to be stalling. And you see they picked up some of these stops here, and now they're taking the ES back up. And that's exactly what they're doing with NQ2 now. So what was that low then? We had low of 96.5, 95 3/4. 95.75 is the low of day. Maybe they're not done. Yeah, if it weren't for this live stream, I'm sure I would have taken more trades. But again, it's so hard to live stream and trade the way you normally do without the live stream. You're worried about the stream, but you're also worried about looking foolish and taking stupid trades and yada yada yada. But that comes with time, I'm sure. And again, I at the moment, I only have my 12 PA accounts that I'm trading off of. Several of them are already ready for payout, so I won't be trading those. I'm going to think about what I'm going to do with those. As I had mentioned earlier in the stream, it's like there's two ways to look at it. is to just take your money when the first time it becomes available, to take a payout and assume that you're going to blow it. Because, I mean, like a payout comes in on a 50K account, the payout comes out at 2,600. You can only take 2,000, so that means you'll be leaving 600. Well, there's a very good chance you're going to blow an account that only has 600 in drawdown, unless you're going to trade micros, which is another possibility. But there's a bigger possibility is if you don't take your 2,000, that you'll blow up the account and you won't even get the $2,000 out of it. Because when you get to 2,600, that account is $2,000 of real money. That's money you can put in your pocket. So you continue to trade that, or do you just take your $2,000 and buy another eval, build that one up, take the 2,000? I mean, so trading prop firms definitely needs to have a different set of rules than if you were trading your own hard-earned cash. And one way to quote-unquote game it would be to just keep buying evals, run them up to 2,600, take your $2,000, either trade micros or just abandon the one you just took the payout on, and always just have a constant stream of new evals coming into PAs. Take your money. Now, I know a lot of people would say, well, that means you had to $3,000 for you had to earn $3,000 in the eval process and $2,600 for the PA just to make $2,000. So that means that's $5,600 for a $2,000 payout. But it wasn't your money, so whatever. Nice rejection off of 700. Now the question is, are they done? Because they did get a new low there, picked up some stops, and now do they rip it to the upside? Possibly, or are they is this just a buy the dip, so to speak? I don't know. That 90 MA is always tempting to take your short off of. But you see, this didn't come down aggressively enough. There's a fair, I wonder why that didn't mark it. There is a little fair value gap right there. Let's see, rectangle. So like from here to here, that's a tiny little fair value gap. Is that the only one? Let's see. Actually, there's one right here too. There's a bunch of tiny little ones right here. That one's interesting because that lines up with the 9 EMA. Appears that it's ignoring it. You just don't know. I mean, when you get a new low like that, it could possibly be that they just went down there to pick up the stops from the people that were long, and now they're just going to rip it. Did it go up into... No, it didn't quite make it into that fair value gap either. The fair value gap started at 24.75. And we're only at 23. Yeah, it's rejecting that 9 EMA, which is always a reasonable possibility. This is just a dangerous area for me. That's amazing. That's a 10-point move right there. And counting, that was the short would have been at 15.25. Yeah, that's almost 12. That would have been 12 and a half points, I think. Not quite. There we go. Just about. Just about to get the $250 on the trade that I didn't take. Yeah, I did tick through it, so yeah, that would have been reasonable. Looks like we're heading for another new low of day. ES still lagging versus NQ, that's for sure. Yep, another new low on NAS. And looks like ES is about to follow. Wow, it is aggressive moves, boy. This thing is going down, baby. God, I'm tempted to go long at 80. That is probably a huge mistake. I can't control myself. New low of day looks like it's 688.5. Nope, another new low, another new low, another new low. Here we go. New low is 85, looks like. Even if I did get into a long here, I think I would manage it pretty tightly. As soon as I got into profit, I'd probably either put my stop at break even or just take whatever I could get, $100 or something out of the trade. At least today, I think I'll stop the stream at 11 o'clock Eastern, which is about 10 minutes from now, unless I get into a trade. If I should get the courage to go long at 80, I'll stay with the stream. Otherwise, I think if I don't take a trade by 11, I will just wrap it up. That's not to say I'm done trading for the day, but I've already seen where this live stream is going to cause me trouble because I didn't take a single trade, and I would have taken multiple trades if I was not streaming. Just hanging out at that volume node right now. This guy right here. At some point, we're definitely going to get a significant run back up, I would think. Not to say that the day's going to end positive, but at some point we are going to get a significant pullback. And the question is, do you want to be on the bottom of that and ride it up, or do you want to wait until it reaches the top and then trade down? Yeah, we're just kind of stuck here, so I'll stick with you guys for another 5 minutes, and then I'm going to shut it down and see if I can actually make some money. I can guarantee that I would have taken several trades by now if it weren't for this live stream. My brain doesn't have enough compartments to handle both at the same time yet. But it's fun. I'll get better at it and hopefully be able to provide you, the viewer, with some useful content. I'm not much of an entertainer. Hopefully I'll get better at it. So here's the question here. I mean, do we go short here, assuming that there's more downside? I mean, I know the two-legged pullback guys, they would be looking for the price action of a trend, break of the trend, new low, and then a reversal. But we've already had that here. Here's our break. New low, another break, another new low. So, and by the way, don't think for a second I even buy into that two-legged pullback bullshit, because it doesn't work as often as it does work. In my opinion, don't buy into anything that requires specific entries and exits. Like buy when one tick above this or one tick below that, or put your stop one tick below here or above here. It just doesn't work. I've done this for a long time, and I didn't start becoming profitable until I started to just make trades based on levels, supply and demand. And it's as simple as that. You wait till it comes into a level. You can either, if you're brave, you can go ahead and just take the trade or wait for it to reject a little bit. And when you stopped looking for these specific systems that call for certain things to happen, you'll never be profitable, in my opinion. I mean, this is fairly straightforward to master this. I mean, it's just a matter of screen time, but really all you're looking for is levels. And you can see it always plays out. I mean, look at right here. This was a swing low, came up, tested that swing low, headed back down. Happens all the time. And I can guarantee if it comes back up into here, it's going to mess with this, come back, you make a few $100 off of that. You just, and again, if you want to minimize your risk, wait for some rejection. But the problem with waiting for too much rejection is a lot of those kind of plays are only for 4 or 5 points. So if you wait for the rejection, the profit's already gone. But again, that's a philosophy. That's a matter of philosophy. So now we have a swing high here. So very good chance if we reach up to here, and now we even have the 21 EMA coming into this area, take a short in this zone right here for 4 or 5 points. Or if you want to sit on it, look for your 12.5 points, and just once it starts to move out of that zone, then you can move your stop to break even. And sure, you'll get stopped out a lot, but all you need is for one runner to take off on you off of a zone like that, and you're going to make very good money, especially when you get to a point where you don't have the trailing drawdown. That's the part that sucks about most of these PA or these prop firms, is that they have the live trailing until you get to a certain level. And typically I'm already taking my payout before, like right now I've got several PAs that are in the money, or can I take payouts out of, but I don't want to trade them because all of a sudden now I'm playing with real money instead of PA money. So I tend to not even ever have accounts that have static drawdowns anymore. Yeah, see, like right here, this is very tempting short. Now the problem with this short is that it has already pulled back and tested this zone. So is it going to reject it, or is it going to rip through it, pull back to it, and then continue up? But you see now that pulled back off of it very nicely. That's amazing. That was 12.5 points right there. That's $250. These bars look so small to me, but they're not. And I kind of live by the philosophy that it's one and done. Like now we've already went up into that zone. The short rejected, over 12 point rejection, and within that same bar, we're back up into the zone. I would be hesitant to go short again. Yeah, it's still rejecting it though. I mean, it really hasn't even touched the 12.5. The last time it touched the 20 EMA was way the hell back here. I mean, even all these pullbacks, none of them went to the 20 EMA, and finally we're like sort of in there. So I mean, no one indicator or one line is necessarily enough to go by, but you put a few of them together, and the most powerful, in my opinion, are these swing highs and swing lows. It's always going to pause there. Now, if you're the type of trader that wants to do a swing trade, that may or may not be useful to you. You're talking about swing trades. Now you've got to be looking at bigger time frames than these 3 minutes, because you use the same philosophy, except on a bigger time frame. But you have to have a stomach for a bigger drawdown too, if you miss that entry. But you can always put your stop at break even and just let it go. But you know, in a live trailing drawdown, you can't do that. Okay, so see, then the second attempt, it actually is breaking through the 20. So now the idea would be, if it can get enough distance between this and the 21, come back, visit it, and then head up. And it's not just the 21 EMA, it's also this swing low that's of use. This is a minor swing high. This is a major swing high. So I would be definitely tempted to take a short up in this fair value gap or this fair value gap. But again, also it comes with experiences. How does it get there? I mean, this could spend the rest of the day to get there. But if this thing runs like crazy into this fair value gap, I would definitely be thinking about a short on it for at least, I probably would go try to get my full 12.5 points off of that. I mean, it's clear that there's a bearish bias today. So if we made a major move up into this fair value gap, I think that we could count on at least a decent pullback. 12.5 points is not bad at all with this market. What are we looking at here? ATR is 18.65 today. That's pretty good size ATR. Also, I just noticed that we are in this 620 area too, so those are a lot of good reasons for this short to work. And the fact that they took this up and gave you the illusion that they were going to take it higher tells me that perhaps they're collecting stops here to rip it back down. Now you notice where it did stop was right at the bottom of this here. See this bar right here? The low of that bar is exactly where this stopped. That is 33.75. The high here, 33.25. So didn't quite make it, but you can see that. And again, the exact numbers are probably a bad idea. You want like a zone. Like I drew a zone here. I didn't worry about the exact bottom of this swing low, just that area of the swing low. And where does it line up with other indicators like the 21 or the 9 or even these volume nodes? And we're at the middle of a low volume node, so this thing could either lose its steam and come try to fall back into this high volume node, or just keep ripping into these higher zones. But now I don't know what to make of this area. I mean, it's, as a retail trader, I'm spooked by what's going to happen here, especially in these low volume nodes. typically I find that once they start to stray away, it can rip through that pretty fast to the next node. Because obviously the reason that it's a low volume node is there's not a lot of interest in this price. So that can drive it towards one of these high volume nodes. But it, typically if it wanted to get to this one, it would have got there very fast. I mean, once it started to breach this and get into this area, it will typically move pretty fast into the next volume area. Things are starting to stall a little bit here, but it definitely seems like it wants to move up. And the areas I would be interested in would be like, say, up in here maybe. Yeah, it wants to make a run up here. And so that's basically this high volume node here. And now we're above 21 EMA across the board. Yeah, this thing's moving now. So the question is, do we look for a short up here or are the shorts over? I mainly trade the NQ, and obviously I have the ES up there to see if we can get some clues as to what's going to happen. And we're right in the middle of a fair value gap on the ES that would be a tempting short. And by the way, I also like these, I think they're called Camarilla pivot points. Very handy too. But again, none of these on their own are foolproof. It's when you combine them that they become powerful. And I know that there's guys that like to trade, what they call them, blind charts or whatever. They claim that, the indicators are pointless because they're lagging and blah, blah, blah. But there's no denying that there's response to indicators. And yeah, you're not going to bet the farm on one indicator, but when they can line up, especially when they line up with supply and demand areas, they're super useful. Because, yes, they'll bump up against 20 EMA, and then it rips through it. But you can see right here, this we lined up with a couple of swing highs, and you see it rejected it. There's guys that make all their money off of taking a few ticks, but with a lot of a few ticks with a lot of contracts. I don't care to do that, but I know there are guys that do it. I think there's a good trader named Alpine that trades that way. He's only looking for like 12, 13 ticks, but he goes in with 3, 4, 5 contracts on multiple accounts. You see how beautiful that reacted? Look at that. Beautiful. And again, I probably would have taken that trade. What I should do is in the beginning is just at least have a sim account that I can trade while I'm streaming. But again, we drew our area of interest here. It worked nearly perfectly. And that was a big gain there. I mean, that's all the way from, that's 18 points. That's over $350. I do have to wrap up my trading today by maybe I don't know, 2:30, something like that Eastern, because I have an appointment that I have to make at make it to at 3. But that's still a long way away. I still got another 3 hours or so, 3.5 hours. Now you see a fair value gap popped up on NQ, which is somewhat intriguing, is to take a long right about there at 36.25. And that lines up fairly well with both the 21 the 20 and the 9 EMA. So you should be able to make something off of that. But this still is a bearish day, so this thing could rip all the way to a new low. I mean, completely just take your face off. So if you're going to take a long, you definitely want to have a reasonable stop. But my hunch is that we're going to go up a bit more, especially now that we're seeing some chop here, some consolidation. And typically, the market will leave an area of consolidation in the same direction that it came into it. Obviously, there's no such thing as 100%, but I think the odds are in your favor that if it chops around here long enough, it'll eventually shoot out the top. And probably what's going to happen if it does that is it will come back, take out these stops, give you the illusion that we're coming down, take out stops, and then rip. It always ends up leaving consolidation. It'll first pull back in the opposite direction. So you might get freaked out and say, uh-oh, it's coming back. And that's a good sign for a bullish move up, is a pullback where it takes these stops out before it heads up. And vice versa. If we get a run up without a pullback, chances are they're just grabbing these stops to rip it down. See, for instance, here, I'm going to switch this to a sim account right here, and then we'll take a long here. Now remember, this is just a sim. And this is just an example. You see that fair value gap and the 20 and EMA and the 9 EMA, they line up very well for what what's his name calls a Judas swing, meaning it comes back, gives you the illusion that we're heading down, But what it's really doing is grabbing your stops, or grabbing existing stops for people who are already long. Because chances are, even if you had caught this run up, you're putting your stops below, a tick below each one of these bars, which at this case, even on this red bar, Summer's in here, so we'll see. Again, that buy, just for full disclosure, that buy that I have up there now is on a sim account. That's not real money. Unfortunately, this is getting slower because it's after 11 now. I mean, I am a full-time trader. This is what I do for a living now. So I most days will trade all the way to at least, I'll probably be with the markets until close. I usually don't take trades past, say, 3:30 Eastern, maybe even before that. Especially if I'm up decently, I won't take a trade past 3 o'clock Eastern. So this action right here leads me to believe that we're going to pull back here, because that's where they start to they try to trap in more longs and take it down, because we never really made a decent pullback out of this consolidation. So I wouldn't be surprised to see this thing head down somewhat aggressively. All right, I think I'm going to call it here on the live stream. I'm going to continue to trade, but, if you're watching this and you are interested in watching my channel grow, and I'll get better as a YouTuber. I mean, it's not something that comes naturally to me, but I'll try to get better at it. And eventually I'm going to put a camera there and you'll be able to see my face and put a face to the voice, and you maybe feel more comfortable. But for now, this is kind of the way it's going to go. And I'll be here every morning, probably around 9:20, 9:25 Eastern, just before the market opens, and we'll go at least till 10. Eventually, I can end up just streaming the whole day since I'm trading it. And like I said, today I have an appointment anyway, so I would have to wrap it up by 2 or so. But anyway, I'm gonna wrap it up here, and I'm gonna try to actually make some money today. I will be back tomorrow morning, so the easiest way to find out when I'm streaming, obviously, is to subscribe to the channel and hit the alerts, that little bell. And if you're watching this after after I've already posted it, if you wouldn't mind at least hitting that like button, I'd appreciate it. I'm hoping to grow this thing slowly over the next few years. But anyway, I want to thank y'all for whoever's watched it to help me on this journey, and I will see you tomorrow.